U.S. President Donald Trump says he will now impose a 50% tariff on copper imports. He made the declaration at a cabinet meeting in Washington, but it's unclear exactly when the new tariff will take effect.
Other things, big ones, we did steel, as you know, they're 50%. We did aluminum, 50%. Lumber just came out. Fortunately, that's copper. And we did cars. And now today we're doing copper.
Just 24 hours after Donald Trump signed an order slapping a 50% tariff on imported copper, the U.S. economy was already bleeding, down a staggering $4.2 billion. On the COMEX exchange, copper prices exploded overnight, spiking 13% to a historic $5.95 per pound. And that was just the beginning. Canada, which supplies over 40% of America's refined copper, retaliated immediately. Every export deal was frozen, and mining giants like Teck Resources and Hudbay Minerals cut off all shipments to the U.S. Ottawa's response was crystal clear. We refuse to trade with a partner who moves the goalposts overnight. Markets panicked. U.S. construction, tech, and auto sectors spiraled into a supply crisis not seen since wartime. Copper, the backbone of every circuit, wire, and motor, had suddenly become the battleground of a modern trade war. And this time, it's everyday Americans paying the price with every car they drive, every switch they flip, and every home they live in. The real question now, can the U.S. survive a self-inflicted blow to its own industrial lifeline? It was a devastating blow to one of the most crucial supply chains in America's industrial core. The impact was immediate. Copper prices on the U.S. CME futures market jumped 13% in a single day, reaching historic highs of around $5.64 to $5.69 per pound. Meanwhile, prices on the London Metal Exchange didn't rise. They slightly dropped, reflecting fears of lower U.S. demand. This led to a historic price divergence, with U.S. copper trading up to 25% higher than LME levels. That gap opened a new wave of arbitrage trading and highlighted what many critics call a fundamental flaw in Trump's protectionist policy logic. Within days, Canada hit back. Ottawa vowed to diversify copper exports, cutting its reliance on the U.S. and quickly turning to Asia and Europe for new partners. With more than 52% of Canadian copper exports going to the U.S. in 2023, this wasn't symbolic, it was a calculated economic pivot. Major miners like Glencore in Quebec began exploring new markets. Experts now warn, if this pricing gap continues, the U.S. could edge toward isolation, echoing the trade collapse of the 1930s under Hoover. Red flags are rising. Soaring copper costs could disrupt automotive, energy, and telecom sectors, setting off a wave of inflation and production delays, with no fast supply alternatives available. Even worse, the U.S. meets just over 50% of its copper needs domestically and imported 810,000 tons in 2024, mostly from Canada, Chile, Peru, and Mexico. Domestic refining still lacks capacity. Domestic refining remains extremely limited. Key plants like Asarco in Arizona have already shut down, unable to make up for the shortfall in imports. The tariff didn't fix the supply crisis. It simply caused prices to surge, supply to shrink, and chain disruptions to deepen. The 50% copper tariff hit like a shockwave across the global market. U.S. prices exploded, LME fell, and a historic price gap emerged. In response, Canada struck back fast, shifting toward new global partners. Economists began sounding alarms over potential isolation and a spiraling manufacturing slowdown. What began as a targeted trade move has now impacted every cable, every vehicle, and every digital device. The consequences are everywhere. When Trump's tariff hit, Canada didn't hesitate. They had leverage, nearly $9.3 billion worth of copper and refined exports annually, most of it bound for the U.S. But that wasn't just trade, it was bargaining power. And Canada used it. Within days, major players like Teck Resources and Hudbay Minerals took action. Reuters even compared the shift to Glencore. They rerouted copper away from the U.S., sending raw materials to Japan, South Korea, and China for refining. It was a complete supply chain detour. The U.S. was cut out of the loop. At the same time, the Canadian government mobilized fast. Canada quickly unveiled a bold $1.8 billion investment plan to upgrade its copper export capacity beyond North America, building out ports, infrastructure, and trade networks to support the shift. That's not a small bet. It's a declaration of intent. Canada no longer wants to be just a supplier. It's aiming to become a global force in the metals economy. And here's the twist. The first major chess move in this copper war didn't come from the US, but from Canada. The moment Trump hit with a tariff, Ottawa redrew its export playbook. Copper that once flowed south into the US now waits for ships headed east, toward Asia, where it's refined and rerouted into the global market. This isn't just about changing ports. It's a protective strategy, shielding Canada from US unpredictability. By diversifying its export lanes, Canada hit the US where it hurts, its industrial heart. If the $1.8 billion rollout goes as planned, Canada's new Asian routes could explode in size. And the US? It'll lose its grip. Less copper from Canada means higher costs for American factories. Refineries will scramble to find raw material. Prices will rise. And its regular Americans will feel it on their energy bills, at the car dealership, and in every copper-powered product. Canada just rewrote the game, not as a supplier, but as a global contender.